Namaskar, hello and a very warm welcome viewers. You're watching the special presentation of Sansad TV, Bills and Insight, your one-stop destination for views, news and analysis of proposed legislations of India that have far-reaching implications and impact your life. I'm your host Kriti Mishra, and today the spotlight is on the Taxation Laws Amendment Act of 2021. President Ramnath Kovind has given his assent to this bill, which was passed by Parliament during the last monsoon session. The Taxation Laws Amendment Act 2021 aims to withdraw tax demands made using a 2012 retrospective legislation to tax the indirect transfer of Indian assets. The aim of the Amendment Act is to bring tax certainty and ensure that once specified conditions are fulfilled, the pending income tax proceedings shall be withdrawn. Demand, if any, raised shall be nullified. Let's take a look at the highlights of the Act. Amendments made to the Income Tax Act and Finance Act of 2012 to end retrospective taxation. It also proposes to refund the amount paid by companies facing trial in these cases without interest thereon. The scrapping of the retrospective tax provides clarity to investors by removing a major source of ambiguity on Indian taxation laws. So why was this amendment needed? Well, the retrospective tax law was passed in 2012 following a Supreme Court verdict in favor of US-based Vodafone. It was introduced after an amendment to the Finance Act enabled the tax department to impose retrospective capital gains tax for deals involving the transfer of shares in foreign entities located in India after 1962. While the amendment was aimed at penalizing Vodafone, many other companies got caught in the crossfire and created a host of problems for India over the years. The Amendment Act of 2021 states that tax raised for the indirect transfer of Indian assets before May 2012 would be nullified on fulfillment of specified conditions, such as the withdrawal of pending litigation and an undertaking that no damages claims would be filed. The legislation marks a step in the direction of addressing the long pending demand of foreign investors seeking the removal of retrospective tax. And for deeper understanding of these amendments, I'm joined by an illustrious panel of guests. I'm joined by Mr. Shradul Shroff. He's a senior corporate lawyer. He's also the executive chairman of the law firm Shradul Amarchand Mangaldas and Company. Also joining us in the studio, Mr. Ved Jain, former president of the Institute of Chartered Accountants. He's the leading CA in the country. I welcome both of you on Sansad TV and thank you so much for joining us. Also in the studio, we have with us a very vibrant audience. Some of them are lawyers and some of them are chartered accountants. I welcome all of you to Sansad TV. And before we commence our discussion, let's take a look at how our parliamentarians debated this bill.
This bill is to uphold the rule of law. The law does not mean it is passed with the majority in the House. The law must be just, fair, reasonable. So now our finance minister has confirmed these principles by bringing this bill and at the same time asserting our sovereignty to tax. So I thank her for her clarity and also for bringing this bill timely.
I hope Honorable Finance Minister from now onwards will not bring any amendment in the Income Tax Act with retrospective effect. This is the assurance what the then Finance Minister, after BJP came to power, the Honorable Arun Jaitley ji has assured the House that no retrospective amendments insofar as Income Tax Act is concerned.
This retrospective tax was brought in as a clarificatory amendment. However, there has been quite a lot of disagreement for this measure, and even as we were in the opposition, we had very clearly raised this objection saying this is bad in law and also bad for investor sentiments. Under the leadership of Prime Minister Modi, keeping up the commitment of BJP that we don't believe in retrospective application of tax, we are fulfilling that word.
Mr. Shroff, let me commence the show with you. The draft notification for framing the rules for implementing the amendments made by the Taxation Laws Amendment Act of 2021 has been issued by the government. Take us through the key highlights, sir.
The draft rules proceed on the footing that to give effect to the amendments to Section 9 and the provisos which were introduced by the main parliamentary body, rules are needed, and in particular, the form in which the withdrawal would take place, the specific issues which need to be waived as conditions, for example, that there should be no cross claims, any petitions, proceedings or claims which were pending will all be withdrawn as prior conditions before availing of the benefit, that there will be no charges for costs or expenses which may have been incurred in relation to the proceeding. All these are part of the rules which have been made, and in 45 days from the making of these rules, the company has to file these applications.
Mr. Jain, coming to you now. Vodafone had invoked the Bilateral Investment Treaty when it went for this arbitration of 1995 that India signed with the Netherlands. So with this act, do we need to change our bilateral investment treaty?
I will not say that we need to change, I think, the bilateral investment treaty, because the bilateral investment treaty is more or less on what is a globally accepted norms. And this type of dispute which has happened in 2012 and now we have been taking care of it, happened very rarely. The issue, because the difference was whether a tax dispute can be subject matter of a bilateral investment treaty or not, that's the issue which is there. Frankly speaking, when we made an amendment in 2012 and overruling the Supreme Court judgment, that the judgment was in favor that yes, India does not have a right to tax an ultimately holding company in respect of assets located in India, so probably that dispute came in. And I think in the post-independence, we have been entering into so many bilateral investment treaty with so many countries, never such dispute has happened. So in case we try to amend the treaty, the way we are proposing, in case we say tax dispute will be outside the jurisdiction of the problem, probably then we may have a challenge of getting investment in India, because each of the investor from that particular country may be apprehensive that tomorrow a tax dispute arises, I will not be able to take the benefit of bilateral investment treaty. Absolutely. Because the investor has to have a confidence in the system, in the treaty. So it is not so good for economic purposes, for the country's benefit also, that we take out such type of disputes outside, because we need to create more confidence, more, I think, so the investors can walk in and invest in India. So we have to look at from both perspective, investor as well as a sovereign country. Sovereign country, India has a right to amend and can say, yes, we will not, this will not be a tax dispute, will not be part of the bilateral investment treaty. But then we need to take care that investor will also be scared a little bit that in case a tax dispute arises, he will not be able to take the benefit. But still the issue is contentious because everything is being withdrawn. So there is no decision because the arbitral tribunal has given an award in favor of the Vodafone or what Karens, etc. But that does not settle the issue because there is an appeal pending. With this settlement, those appeals will all become infructuous. Absolutely. Because they have to withdraw it. So still India can later on claim tax disputes are not subject to bilateral investment treaty. India Absolutely. Has not considered that position.
That's a very valid point that you're making, sir. But Mr. Shroff, what are the other conditions mandated by the Act for nullification of any tax liability?
I think essentially the fact that those claims beyond 28th of May 2012, they are not going to be proceeded with because 28th of May was the date on which the President gave his assent to the Act, the 2012 yes. Act. Post 25th of May 2012, it is in any case prospective. So the retrospective question does not apply to something which is made today. It's only the retrospectivity from 1st of June to 1962 which has been effectively cancelled. Law was enacted to make it past, concerning past assets, where past transactions where this had not been taxed. The other question which was done is that there are two further amendments to the provisos, that no interest will be paid and that the claims and everything will be withdrawn. So based on these amendments to the Finance Act, the enabling process of how disputes can be withdrawn through a detailed rule-making procedure has been enabled, and that's how the process is effectively coming to a conclusion by 14th of November.
So those are the imperative conditions. But Mr. Jain, there are several other countries that have retrospectively taxed their corporates. For instance, US, UK, Canada, Italy, Australia. Any important lesson for India there?
See, frankly speaking, to tax is a sovereign right. Nobody denies it. And that is very well part of the constitution, yes. Parliament has a right because the legislature has to decide to tax it. But the only question arises is how far it is correct when a person having taken a decision of the law of the land on that day, later on is required to pay tax which was not that tax as on that day. So I will say retrospectivity has to be examined from two perspectives. In case there was an ambiguity, in case there was no clarity and some dispute was there, though legislature intended to tax one particular item, and maybe because of the language used, maybe because of the interpretation, and later on it transpired that something has gone wrong, and that's why the tax has been escaped. Probably I will say yes, retrospectivity can always walk in and there can be an amendment. No, this was not the law, this was never the intention. But it cannot be retrospectively with the law was clear that there was no tax on that particular item, and now we decide no, we want to tax it from retrospectively, then probably something goes wrong. So the issue in Vodafone and Karen's probably was whether in case a holding company is holding share in another company which is not an Indian-based company, but the assets are held in India, whether tax can be levied on that or not. Probably our law was clear and the Supreme Court said that our law of the land is very clear and this was not subject to tax. To overcome this, an amendment was made in 2012 which created a dispute that this is an amendment which is being made whereby a person is being required to pay tax which was not there at the time when the decision was taken. So that's why the bilateral investment treaty was also invoked, because this is working against that principle. So I will agree with this. Country, Parliament, legislature has a right to make a retrospective amendment, but that retrospective amendment should be to correct something which has gone wrong, something which has been done, but not to levy a tax retrospective.
But the impact of this act is going to be of paramount importance. Mr. Shroff, given now that India is focused on pulling in investments and global value chains, especially from China in the post-pandemic era, what would be the impact of this act on our investment flows?
I think the two facts which emerge out of this is that India is willing to put its law on a fair and equitable treatment basis, which is the reason why foreign awards were passed against India, that you were not fair and equitable, and that's why the BIPA was invoked and India was asked to pay over 1.7 billion in CAN and over 10,000 crores in relation to Vodafone. So the basic principle which is being told to the world at large is that India will be fair in relation to its taxation, number one. Number two, that this is a certain regime and no longer uncertain, because investment does not come in the face of uncertainty. And these are the two immediate flow-outs from the effect of this amendment.
So I'll borrow your sentence there that this is a certain regime and not an uncertain one. Mr. Jain, before we take the questions of our audience, how do we further fortify our dispute resolution mechanism?
I see that under the law, I believe there is enough and good mechanism for dispute resolution on tax dispute. And we have, if you look at the hierarchy, the way in taxation is there, we have at least 3 platforms where one can get the dispute resolved. We have an assessing officer who has to determine the tax. These proceedings are not adversary proceeding as we say in the law. These two are not opponents. The one person says this is the tax, another person determines that yes, it is a tax. Then we have a forum which we call dispute resolution panel. You can go there because foreign investors are entitled and eligible to be there. And then they can represent their view that this, and there are 3 senior officers who sits and then they decide what is to be done and what is the dispute and how to be done. And still you have another forum, Income Tax Appellate Tribunal, where you can go there and you can also, and thereafter, of course, if the question of law is there, then to High Court and Supreme Court. Sure. So in India, we say that under the income tax law, direct taxes, even in indirect taxes, there are enough mechanisms where the dispute can be resolved. A fair and equitable treatment is given.
Yes.
And both parties, the tax administration, tax officer, and the taxpayer, both are treated at par. So
and
there is nobody in hierarchy. The tax officer is having a higher pedestal. Both are at par, and both have to put their case, yes, how they want to. I believe that there is no dispute. The only dispute which we are referring to was There was judgment came from Supreme Court, which was overturned
Yes.
by an amendment in the Finance Act by 2012. And then there was a validation clause which was inserted by Section 119 of the Finance Act 2012 at that point in time, which created a little bit problem, and that led to arbitration award. That's the only issue.
All right, so there's fairness and equity. Now let's take the questions of our audience. Please go ahead, introduce yourself and speak your mind.
We are against this. In this act, we are saying that retrospectively, that 2012 amendment, we are against that amendment. Like that amendment created to taxation of income from foreign, which was before 2012. And now we are making this amendment now that we are applicable this amendment from 2012. Like was this amendment was really needed now? Like we have to refund that money now during the post-pandemic era when the income is lower for the country and all.
Mr. Shroff, would you give that clarity?
Needed?
I think there is a mistaken impression here which needs to be clarified. The retrospectivity is only prior to the President's assent, 28th May 2012, when the law was passed. After 28th of May, it is prospective as an act, and therefore that aspect of it has not been withdrawn even in this latest amendment. All that they are doing is that they're cancelling the tax demands or orders which were made between 1st June 1962 and 28th of May, because that's the retrospectivity of it. So the refund only pertains to the demands which were from 1962 to 2012. It does not affect future demands which can arise on the transfer of a foreign company's shares, and which is what is being protected by the law. So the law has not amended that. That law of prospective taxation continues on the statute book.
Absolutely. Fair enough. Let's take the last two questions together.
My name is Manish Sharma, and my question is, there is a line mentioned in the act that if SSC will get refund, so it will be provided by government without interest. So the date on which SSC will get intimation of refund and the date on which it will actually credited by government into their banks. So the time period between those two dates, so the SSC will give interest provided by government of that period or not.
Sir, my question is that when the amendment in 2012 Amendment Act comes into effect, at that time, if any SSC has a long-term or short-term capital loss, then he had set off that loss against any income under that under capital gain head. After this amendment, that is Amendment Act 2021, Taxation Amendment Act 2021, if at that time SSC has set off that loss, will it be taxable right now?
All right, Mr. Jain and then Mr. Shroff.
I can answer this question. Let me answer this question first on the vacation. Very interesting question you have raised, that in case an SSC has taken a benefit of loss, can be withdrawn or not. See, this 2021 amendment is an optional amendment. It's not applicable to all. It says there are two amendments. One, that this retrospective application of law, which was there, that in case you are holding an asset in India which and shares in an Indian company, is ultimately selling it, the substantial value is being derived from assets located in India, then tax is payable in India. So government of the law country has a right to tax from today onwards. The government of India today can say your tax rate is 30, tomorrow it will be 40, no issue. But from back date, it cannot do it. Now, in this case, what the government is saying, my law was correct and it continues to be retrospective.
Yes.
From 1st April 62. Only thing is, those taxpayer, those company which do not want to have a retrospective where demand has been created, they can fill in form, they can give a declaration in 45 days. In those cases, wherever the demand has been created, wherever the issues are going, we will close that issues and settle it out. But otherwise, the law continues as it is. So this amendment is only for the purpose, only to give benefit to those taxpayers which want to avail. In case anybody has taken a benefit loss, I believe he will not file this form and he will continue to have the benefit of that loss, whatever it is going.
Mr. Shroff.
Under the amendment which is being done in 2021, it is clear that no interest shall be payable. So interest shall not be paid either way, because the language is wide. It doesn't say interest from or interest against. It just says no interest shall be payable. So this question, in my view, does not arise.
All right, sir. Point well taken. And time to wrap up the show. And let me end the show with Prime Minister's quote. The decision to do away with retrospective taxation sends a clear message to the investors that India is opening its doors to new possibilities, emphasizing that the government has the will to deliver on its promises. Unquote. On that note, thank you so much for joining us, Mr. Shroff and Mr. Jain. Next week, we'll return with incisive analysis of another important bill. Till then, take care and stay tuned to Sansad TV. Namaskar.